Hello and welcome. This is Roy. I decided to share with you here a short clip taken from a very long video, 80 minutes video that I just recorded for my subscribers. This clip I'm sure you'll be interested in, and I decided to share it with you because I think we are at a critical point in time here with the stock market. If things work out as I detailed in the video, I hope you benefit from it and hope to see you at some point on my website. If you wish to have further information about my website, my services, please stay on after the clip ends, and I'll talk to you again. Have a great week. Bye now. Hello and welcome. This is Roy. I'll begin first with a few general comments. I have looked at many charts in preparation of this video, and it appears that the strong fall in the precious metals has set now a new phase at least as far as the metals are concerned, the commodities. We're definitely going into a correction, lengthy correction that would give a helping hand to the dollar. The euro is facing mounting pressure, and some of the charts look downright critical for the euro. So I see as far as I'm concerned, the euro and the dollar, they are both seek patience. It's just a question who is seek more at what point in time, and it appears that the euro is getting really hard time now, with the mountains of problems coming its way from the weaker economies, and the dollar is now able to raise its head. Long term, I think both are doomed to depreciate in value as paper currencies. Situation not very clear to me at this point in time concerning oil. I see most of commodities turning down. I see the stock market possibly at a critical point. So I would imagine that will impact negatively oil, and oil will come down, but the wave count in oil is not as clear as I would have wished. I see a danger for those who are heavily engaged in selling the bonds short. My concern is that if we are going now into a sharp reversal in the stock market, that bonds across the board will simply take the traditional role of rising when stocks are falling. Often that happens. So be careful. Even if you just trade the bonds, keep a sharp eye on some critical indices that I'm going to discuss in this video, stock market indices. And if they go through important levels of support, they break through, be careful, extra careful with your bonds positions, because bonds can suddenly take off as people are running again for some safety as the stock are being shaken. Okay, so here's the list of charts I'm going to look at. I've got the dollar index, the euro, British pound, high-grade copper, gold, silver, platinum, palladium, gasoline, the stock C&Q, Canadian natural resources. And there is a reason for that, of course you will see. I've got then the bonds, UST bond, TYX, TNX, Euro bond, long yields. That's the continuous chart. And I've got long yields, the March 2011. I've got TLT, that's the ETF, the bonds ETF. And then I'll have a look at stock markets, TSX, DOW, SPX, the OX, EU Stocks 50, the DAX, the Hang Seng. And I'll terminate the video with a look at a very important index, the Chinese Securities Index. Okay, let's begin. This is the Dow weekly scale, and I'm going to have some long-term exercise here, not just on the Dow, on several indices. And I'm going to put all the options on the table for you to consider. I think the worst mistake you can do as a trader is to be too confident about a specific scenario. This is a recipe for disaster, absolutely. And the various books that you can come across and read, and you see that people got stuck into situations where they just couldn't get their mind off a specific idea, and they just obstinately fought the market to do what they thought was the right thing, and that's how you can reach extinction. Absolutely. Now, in the case of the Dow here, we've got it here on the weekly scale, and you can see crystal clear where the Dow is here. Is battling against. There is a major overhead resistance here that put it down for quite a few years on a few occasions. Here just a few months when it was surging higher, and here it held it for quite a few months before it completely collapsed, and now it's back to the same level. Do you see that? Crystal clear. Now, there are people out there making out of this a head and shoulders. Well, I can't say it's not true. It is it's right there on the chart. It's quite possible. If it comes down, breaks 7,000, yes, this is a head and shoulders. Well, I can't say it's not. What I'm concerned about right now is to focus our attention on. I would be quite happy to pick up the next 4 to 8 weeks correctly, and then see how it develops. That's how I like to go about it. But here's a possible interpretation for a very bearish scenario. Okay, we are back to the very bearish scenario. I am not wholeheartedly with it, and I am not attempting to ignore it either. This is a situation where you take the first leg down as one that is to be continued after a correction. That is an A. That's a triangle B. We had a fantastic rally that was basically a C. That was a C. Sent many investors along with their advisors to a euphoric state of mind, with the printing presses promising paradise, and that's where we are right now. And you can see the volume is already not with us. Momentum is not with us, and overhead resistance is definitely right there, banging on our head. I think it is time for a correction, a serious correction. Let me take you to the weekly. Open it. That's the idea. That's an A. That's a B. And of course, the reverse option is that this is a 1-2, yes, and we're going higher. I somehow favor the 1-2 idea. I think the economy is not in such a bad state. I think things are improving. Things are getting better with time now. But to be, if you like, technically correct, I have to point out the possibility that this could turn into an ABC. If it comes crashing through 10,000 badly, of course, this should raise a major alarm that this is probably the case. It could crash a lot lower. So, of course, we are on the lookout here. This is the weekly going back to June 2009. 1, 2, 3, 4, 5, and you can see the last few weeks the price action has been fairly choppy. We had it 1, 2, 3, 4, 5. The last 5 weeks we haven't had really a full scale. Look at this. They're all fairly choppy. That was an impressive one, and afterwards the volume petered out and the momentum petered out, and you can see volume here also not going along. Let's go to the daily, and I would put forward a suggestion, and again it is a suggestion I submitted to Mr. Market for his approval, and I haven't got much more than that to say. Okay, this is the best that I can do for you and for myself, for my own trading. I am putting this line here, and for me this is the line in the sand. It breaks through this line, sell the hell out of this market. This market is going to crash. This market is going to break down like I don't know what. This is the line to watch. Okay, I would do it myself. This market breaks through this line, and I would start adding. I would start piling up. That will be 1, 2. That's a 3. That's a 4, and I think that's a 5 done. I'm going to take it here to the 60 minutes. The line runs at I'll have to get let's see, the right level, precise level is 11,531. You may want to put it here. I think this nailed a pretty clear top here. 1, 2, 1, 2, 3, 4, 5, 3, 4. 1, 2, 3, 4, 5. This is an idea, as I said. We get continuation early Monday, Tuesday. We get a continuation. It breaks through this level, and that's it. We are on our way. The bear will take hold of this market, and it will start falling for weeks. This is the best scenario that I see here. I have more detailed wave count for you in the case of the SPX. Let's take a look at the SPX. If you like some further information about my website, my services, all you have to do is click on home at the page which you are right now. That takes you to the home page of my website. I have a page on Twitter. You are welcome to join. I don't make intensive use of it, but from time to time I do make some comments. I've got 3 articles here that I've written. You may like to take a look. His testimonial submitted by an active trader that is using my service. There are more testimonials right here. I have an affiliate program. You are most welcome to join. You don't have to be a subscriber. Links to my videos speaks for itself, but I do have a new YouTube channel that actually covers the recent videos. I haven't had a chance to actually update that, and it also includes a video explaining about a weekend product. So if you are searching for that new YouTube channel, please type EW Practitioner, EW Practitioner in one word when you go on YouTube, and that takes you to the channel and you will see all the videos. RN Elliott, that's a section where you can download a full-scale book. I suggest you do that if you're interested seriously in learning about the wave principle. That is an excellent first step. Private policy, terms of use, these are standard categories. Why join? Read that to see in which ways I think I can help traders at different levels. Subscribe here. That's where you take practical steps to subscribe to my service. I have 3 ways in which you can use my service. You can either take an introductory offer, which is just 1 week. It is a one-off, meaning you can't use it repeatedly. You can use it one time. It's only $9.99. It gives you access for 7 videos. Today's video, plus the chart, plus every single video that I'll record in the coming week, and the charts. And after 1 week, you make up your mind. You want to continue. You use the other any of the other options. The second option is a weekend product where I allow you to access the weekend videos plus the charts, and that is priced substantially below the normal product, which is really directed at very intensive traders, people who can watch the market every day and can make use, can actually digest all that information that is being churned by the market every single day. And the third product is the full product that costs 79 euro only per month. That gives you access to a lot of information, a lot of setups that are run through every single day, and basically keeps you really in fully informed about the many various markets that I cover. I'm also open to some suggestions. If you come on board on the full product or any other products, please feel free to ask me if there is a specific market that you like me to cover. I can't promise that I'll cover it every day. I'll do my best to cover it from time to time, or at least have a good look at it. That's contact us if you have any problem whatsoever. Get in touch with me. I'm here to help. Tell a friend. Spread the word by all means. I would appreciate a helping hand. Downloads. That way you can download charts that I put on in the public area. You can see the kind of work that I do. Recommended reading list. Go ahead. They are fairly it's not as extensive as I would have wished to put here. I just don't have enough time to update it. I have many more books that I would like to put. I need more time to go through that, but there are quite a lot of books here, and also some links to download the full-scale books. So go ahead and take a look. Frequently asked questions, that's where you really have to come back to this. If you decided to subscribe, that will help you to find where to find past videos, past charts, etc. Useful links, speaks for itself, and that's about it. So I hope to hear from you, hope to see you on my website, exploring a bit what's going on, and get in touch with me. The slightest question you have, whatever crosses your mind, I'll be glad to help. Wishing you successful trading. Have a great week. Bye now.